The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, noon until 1 p.m. And on this 6th day of September, what an interesting market. Look, I'm showing the S&P cash right now. On the left is the daily, in the middle is the weekly, on the right is the monthly, and here's the 120-minute chart. It fulfilled a whole bunch of the obligations in the Chapman wave methodology. It did make that D at 2916.50 on the 29th of August. But look what's happened. It's had 1, 2, 3, 4, 5. I think I have to open this a little wider. It has had 1, 2, 3, 4, 5 bars on the downside. Very heavy bar today, down 13.88, down 0.48% at 28.74. The reason why I'm going to start here is if you look at this, it's taken 5 sessions to get to the low of the day, which is the 28, what is that, 2868 level. And yet, 1, 2, 3, when it came off the low of the 24th at 2862, in 3 sessions after that, gaps up, and in 3 sessions, it goes straight to 2916. What we've done is we've seen the MACD pull back, cross negative, stochastic's gone from the 85, well, it was actually in the 93% area, down to 77%. That's very negative. The price as it stands right now is below the 9-period moving average and the 14 for the first time since it broke out above both of those averages on the 16th of August. And yet, this is the fascinating thing. If you look at the Dow, of course the Dow's only 30 stocks, but the Dow is down 0.09, down 21 at 29,953, having held very nicely again so far today above the 9-period moving average, the green line right there. Hasn't got for 2 days. It hasn't got 3 days ago. It hit the 14-period moving average for 2 days. It hasn't hit that. The MACD is just crossed negative. The stochastic's at 80%, still good. And I'll get to the weekly charts in a moment. But I wanted to show you something even more important. The QQQ, this is the NDX 100, has pulled back very sharply. I think the low today is 180.73. Yes, 180.73. Just the other day, it was at 187.52. But here again, what you've got is 1, 2, 3, 4 sessions to the upside, 4 sessions to the downside, and we've held quite well in that 181 area. So the speed with which there's been bad news, and let's face it, when you look at the SMHs, which are doing really nicely for a couple of days, smashing to the downside, down 1.87%. That is the tell. And yet, look at the weekly chart of the semiconductor index. Still not very bad. Technically not that good, but price-wise, it's holding. And I made a big deal about this Chapman wave inside track repellent zone. It got right to the edge yesterday and then pulled back. Look at that monthly chart. I need to go through this. I'm going to go through this very carefully. Why? Because this is a juncture. Oh, question in the den about IWM. Absolutely. IWM, that's the Russell 2000, which was holding very well. Now it looks like this is not a B, but probably an F in the daily chart at 173.39, the high of the 31st of August. And yet, it still has, day is so young, but it still hasn't taken out the low of 170.36 made yesterday. And the weekly chart is still pretty good. And the monthly chart is really good. So I need you to just take a moment and say 3 things are really important. One is the volatility index, the VIX index, you know my theory, that if it starts to hold in the mid-teens, around about 15 to 17, somewhere in there, on a closing basis, and it does that for a couple of days, and the market, the Dow has to be down triple digit, the S&P needs to be down about 15 or more, the Qs have to be down sharply, and that VIX index has to be running sharply, with the market perceiving that whatever news is out there is bad news, and that bad news has to filter in day after day after day. And therefore, you would get, and the TLT, let me see what the TLT is. Whoops, can't do that. Type it in B, and now we're going to go to the TLT. TLT, when I last look, was up a little bit. Yep, it's up 43 cents, no big deal, at 120.14. Now, let me just go through the panoply of what the different concepts that I look for in bear phases. I look for the futures to open sharply lower, usually about the S&P's Dow's down 90 to 110, S&P futures are down at least 15, and the Qs, the NDX 100, the NDX right now, the NQ is trading at minus 1.10, down 82 at 74.49, alternate count G, and I think that's what it's going to turn out to be. This is an very important moment. You cannot have, the Dow has been showing fabulous relative strength, but you can't have the Dow 30 on its own. It just doesn't work that way. You have to see a conglomerate of the key indices all working in unison, either up or down. So the fact that the Dow is holding well is a good sign. The fact that the market keeps wanting, there are buyers in there that keep coming in. And look, the NQ was down, the low today was at 74.15. We're trading at 74.49, open today at 75.30. Yep, down pretty sharply. There's no question about it. This is a sign, and I've been talking about this for how long now? I said Amazon, holding well, but just made a peak D. There it is, peak D. I said Google, and I'm going to Google, this is Alphabet, Google down 22, made an a peak D in the weekly, a peak E in the daily, and a possible F in the. There is no question, as far as I'm concerned, that the heavies are going to be under a lot of duress. Netflix, Apple, let's see where Apple is. Apple was holding very well. Leg E, now it's a peak E possible today, 229.67, the high of yesterday. I am looking at this and I'm saying, if there is a rotation, even now, the fact that the Dow is held so well, only down 9, it's kind of lifting up the market. The buyers are there. What is going to change the scenario from a short-term pullback to a short-term sell mode in my charts, SPX, so let's just go back to the S&P down below the 9-period moving average, now down below the 14-period, MACD is negative, stochastic. I'm pretty sure by the end of the day, I'll be putting a down arrow, and I'll be saying S&P is in a down mode on the daily. The weekly is still looking outstanding. Isn't that interesting? I'll be back because we want to talk about gold, which was up nicely earlier on, now it's up 3. The dollar, which was down a little bit, is actually holding pretty darn well. It's down 3 cents.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
So just to get to the nitty-gritties, as if this was Technical Friday, which will be tomorrow, but treating it as if it's today. In the Chapman Wave 5, we got that 5 on the move down to 25,805, and now I showed subscribers that we were at Chapman Wave 4 in the 120-minute Dow chart. There should be a 5, and we got that 5, and then we've had a really sharp pullback since then. Now, this is going to be very interesting. Why? Because having identified today in my opening call, in my Traders Corner for subscribers, 2 stocks that I kind of liked, which are holding extremely well as we speak. I'm looking at this and I'm saying, look at Johnson & Johnson, not one that I picked, but I'm showing this as an example that Johnson & Johnson's down 15 cents. It's had a very nice technical action since this channel, this little down channel. And I'm looking at it and I'm saying, well, this is kind of dollar related. And at the same time, while it might be kind of dollar related, it is also in a sector of the Dow that got hammered, going from the 146 area down to the 117s, 118, and now it's trading at 135. So that says to me, and I've been talking about this for a little while, that if you're in the right sector, meaning the right sector on the upside, or in this case, also the right sector on the downside, which for anyone who shorted the S&P in the last few days, that's been the right side, or the QQQs, that's been the right side. I'm looking at this and I'm saying, not all the ducks are sitting correctly. Look at the XLF. The XLF with yields just bouncing today, lousy action down 16 cents. It's just kind of stuck. Look at the TNX.X. There we go. Look at the TNX, the 10-year, pulling back here, still stuck in that range, and I think it's heading towards the lower part of that range if this market continues to show weakness. But it's going to have to be to break into the low, below the June the 1st low of 27.59, 2.759%. I think that this market has to drop, and it has to include the Dow to really get that that momentum, the velocity of breaking a serious left side support and tanking would send the TLT up very sharply. And that TLT, I think, until it gets to the 122.50s, it's at 120.17 right now, until it gets to the 122.22, even 122s, until it gets there, it's saying, you know what, I just kind of in range bound right now. But I'm also going to say that this is definitely, now let me go through a couple of things. If you look at the dollar, DXY, to my eye, just on a purely technical basis, there is still more sideways action to come. I just don't think the dollar can break to the 96s. It's at 95.13 right now. But it also says that there's pretty darn good support in the 94.50s, maybe even to slip to the 94.30s. If it breaks 94 support, that's different altogether. Then you're going to see gold actually take off. If you look at the GDX, a real good proxy for basically how gold is doing, it's up 1 cent at 17.88. It's just been red candles, 1, 2, 3, 4, 5. The doji, six and a little doji in the last 7 sessions. Not good action at all, but it hasn't broken down in the sense that it's gone below the 17s. If it breaks the 17s, I don't think that the GDX is going to be able to hold very well, and it'll probably slide even further. So with that said, here are the parameters that I'm looking for. IYC, and that has Amazon as one of the greatest weightings. It made a peak D, and now it's saying to me, within the sectors, you've got the high tech, you've got the semis, you've got the iShares US Consumer Services ETF, and of course that includes Amazon as one of the biggest percentage plays in that sector, and Amazon is trading at 1955, down 39, right on the 14-period exponential moving average, which it broke above for the first time back in August the 2nd at 1786 to 1836. That's where it broke out. So this is very significant. Now I'm going to talk about my fears. First of all, let me say, in the longer term, this would be my concern. If in September, especially if it's in the first 2 weeks of September, this is the first week of actual trading. Next week will be the first full week of trading. Let's go to about the 16th of September. If by the 16th of September, the weekly chart on Amazon has taken out 1823 support, that is definitely going to impact the monthly chart. If the QQQ, trading right now at 181.49, come back quite nicely, not great, it's just come back a little bit, down $1.97. Breaks and closes under 177. Give it a little room. 178.38 is the 14-period moving exponential moving average. I'm going to give it a little room, and it goes into the so-called Chapman Wave Inside Track propellant buy zone, and that would be in the one with. It cannot break 100. It mustn't close under 176. Let's call it 175.70 because it's a moving. It's a trend line that's rising. So let's give it a little bit of room. Let's say 177.70. At 181.42, that's 4 points. But today, so alone, it's gone down 2 points. It was actually worse earlier on. So I'm saying, in the next week and a half, if the QQQ breaks that trend line of the 177.70 area, that would be very negative. That support, the actual red dash trend line, go to next week, will be 175.50. So that'll be 175. 177 to 175 is going to be absolutely imperative to hold in the month of September in the QQQ. Any break to a new all-time high above 187.52 obviously will be fantastic action. I think we're consolidating here. What I am trying to say is that, are we going to consolidate in a rotational manner? That's going to be so important because we're doing that right now. Even though the 500 and the 2,000 stocks, the comp index, are already pulling back and dragging the general market down, the Dow is attempting, and it's showing in the mix. Home Depot, what's Home Depot doing? It is up $2.55. This rotation, I have an index that I developed called the cash index. It's CASH. So it has Cintas. I just typed in cash. I don't know what that is. Meta Financial Group. I didn't mean to do that. CTAS is Cintas Core Overalls, Uniform, Rentals, up 64 cents, holding really nicely in this up channel. Made a peak E, a leg E, could be a peak E, but the MACD is negative, stochastics at 79% and 80%, yet the price is holding beautifully. Weekly chart looks really good. All of it looks a little stretched technically, but the price is the price, and that's holding. A is Amazon. We did Amazon, and we do it again. Amazon trading right now down 41, right on that 14-period exponential moving average, really hasn't budged, down 2.11%. This is going to be a tell. And SPY is the other one, cash, C-A-S-H. SPY is pulling back. That red candle within this channel is a little pretty down channel. We'll talk a little bit more about it. We'll get back. As I say, I'm going to try to treat this as Technical Friday because it's a very important moment. And H is Home Depot, which we did outright.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. We're going to go straight to Ari in Arcadia. Ari, how are you?
I'm doing well, Basil.
Good. So, Ari, you'd like to talk about
RGLD.
RGLD, Royal Gold, trading at 74.13, down 4 cents. So, Your plan was to go short. You've been long for forever, and you got a position. I think you're using puts. Is that correctly on the short side? And are you still holding those positions?
I use calls on the short side and puts on the long side.
Okay. All right. Good.
I sell the call.
Right.
I sell the call, and I get a value for it, and then I'll sell a put when I think it's at the bottom. I sell a put, and hopefully it doesn't hit it.
So tell me, as it stands right now, RGLD, Royal Gold, we had discussed, and I said on a worst case basis, and I'm not sure it would get there because the whole thing was how did it hold? I said to you between 82 and 79, how would it hold there? It didn't, and it went straight to the 200-period moving average in the weekly chart at 74.13, where it is right at this moment. What's the story?
Well, it's at a 61% retracement. And remember, I view it as a trading in a band, and the band is roughly from 60 to 105, which it hasn't hit 105. And there's no reason why it can't drop down to 60.
So I'm drawing a channel line. Let me show you what I'm doing in the monthly chart from that peak A that was made back on the back in August of 2017 at 87.74, and then the two little double tops at on August a year later at 94.11 and 94.39 gave you peak C because there's an inside count, remember that? And then we got that peak D when you called. We were looking at it at 98.53 back in July of 2018. If I do a parallel line, that's all I'm going to do. I go new parallel, click, and it goes. And where does it come out? It says we're in the area in the monthly chart where this should be a potential support area. I call it either a buy zone, a propellant zone, or a support area, because if it breaks under it, that's usually not very good. And that line for September comes in at 70, around about 72.87. Let's call it 72. So we are really close to that particular line, number one. But the MACD is turned down. The stochastic is very negative. In the monthly chart, weekly chart, MACD is really bad. Stochastic is making the W formation, which says could be close to some kind of a bounce, and in the daily chart, the MACD is showing a little bit of a positive divergence, and the stochastic also is showing somewhat of a divergence with the unbalanced volume really close to trying to turn up, but at 7.77%, that daily chart, it needs to get to the 12 or 15% area to be able to sustain a move that's going to take RGLD from the 74 level now to the 9-period moving average of 76.87. So that's the way I'm looking at it. Now, my question to you is this where you start to look at where you want to cover, where you want to take profits, where you want to either get out and wait, or are you still holding your positions or maybe modifying them?
What's happening is they expire automatically on the third Friday. So those, for the poor guy who I sold it to, they're zero, and I keep all the profits.
Okay, good.
So I just let them expire right now because it's going for me. I have no reason to get out of the position.
And
but the question is, go ahead.
Sorry, yeah. No, I just wanted to say, if they are worthless, they would have to rally at least, I mean, you'd have to get Royal Gold to rally at least 6 or 8 points between now and a week from Friday to even see it go from pretty much zero to even 0.30, right, or 0.50.
That's correct.
Okay, right. Okay, so right at zero right now, you're taking the entire profit, so you may as well just take it and forget about it, right?
Yes. What my thing is, I view this as a between around 75. I view it as a really good support, like you do. Yes. And I'm kind of wondering if I should just stand still and not do anything. Not go short, not go long, just kind of.
So let me just do this. So let me just show you something on the gold contract. And a lot of people are asking about gold right now. Gold is now only up 2. At this point, under other circumstances, if there was a worldwide crisis coming right now, gold would be, I mean, you'd be looking at 1240 to 1255. That's the way it usually worked over the years and years and years we've looked at gold. So this is basically saying that the crisis is not showing up as a fear factor in gold. And that's why I like to look at gold in 2 ways. One is where it's a commodity that's being traded either positively or negatively. In this case, the weekly and monthly charts are very negative. The daily's just had a nice bounce. And the other is as a commodity of fear. And that goes back to the historical years where people would put gold in their shoes, and it was a form of trade. It was a form of safety, so that if you ever had to flee or leave your house, whatever it is, you had something tangible to use as cash. So what I am looking at here is that today was a very good example that if gold started off running at about 6 points, then 7 points. I think it went higher than that. In fact, it went to the high today is 12.70, and now it's trading at 12.03. Day is young, anything can happen. But this would have been the opportunity to take out and start leg C above the 28th of August high of 1220.70. So I'm looking at this and I'm saying, it doesn't make sense. I think, and I'm going to be talking about this probably tomorrow. I'm going to spend a little time talking about the dollar. It seems to me that the dollar has international backing, just as in the longer term, in the big picture, United States equities are becoming the favorite vehicles for foreigners. This is my impression for what I read from what I'm looking at. And that's saying to me that as a fear factor, I don't think gold is working. And therefore, we have to look at it as a commodity. And if I look at it as a commodity, I have to go to high-grade copper, not doing well, it's up a fraction. Chart doesn't look good. I have to look at silver. In different days, it's acting either better or worse than gold, but both of them are acting poorly. Weekly and monthly, gold, silver is not acting very well. If I look at platinum, they're all doing the same thing. Platinum is holding a little bit better, but their weekly and monthly charts don't look that good. And if I look at the TRCCI, which has oil, it has everything in it, that is the Thomson Reuters commodity equal weighted ETF. Or is it a fund? I can't remember. It is also, it looks exactly the same. So I think you're correct. But you know what? All you need to do is to wait a little bit, because you could always modify your plan. If there is a bounce in gold, you're still making a great deal of money. You could always exit and change your trade. I think you're correct. Stay in this position maybe another day over the weekend into Monday. Maybe let's talk again Monday and see what's happened.
Thank you.
And congratulations, absolutely fantastic trade. Very, very well done, well planned, well executed. That's Arian Arcadia. I'll be back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So let me get to these questions quickly here. IRBT, iRobot, IRBT takes quite a dive today. It's down 8.39, down 7.30% at 106.60. So what's the question? Good day to you, sir. Thank you. I'm short IRBT at 110. Could you please give me your analysis? At this point, I'm looking at to risk $5 and target of 100. Okay. So the daily chart has a pattern that I look at very often, and that is this expanding wedge cone formation called the falling axe. If it takes out the low, and it's very close to doing that, and it's under the 14-period exponential moving average with the MACD really turning down sharply and just gone negative today for the first time since it broke out back in early August, and the stochastic at 83%. I think you you went short at what? 110. Fabulous. And the high right here is 118.75 on the 28th of August. Good. So if you're short at 110 and it's trading right now at 106.67, I'm going to say stick with your five-point stop. That's very good. Buy stop, that is. But what I am looking at here is the leg F with very little support in the weekly chart until you get to 95, which is the 9-period exponential moving average, the green line. MACD is good, stochastic is very good. So I'm just going to say to you, whatever the conditions are, and I don't know if it's an earnings report or whatever it is, I probably could find out right now because I think this is more market conditions. News, where did my news go? News right there. Click. Yes. Okay. Downgrade. Oh, it's just a plain old downgrade. Nothing to see here, folks. So that's not an issue because that could change in a couple of days. Yes, I'm looking at this and I'm saying, stay with the stop. But what I would say to you on part of your position, if there's a rally back to you're short at 110. I'm going to say you've got your 5-point stop. But if it bounces in the next 3 days, by Tuesday or so, it's actually bounced and it hits 111.20, I'm going to say you just watch it really closely because the monthly chart is still really strong. And that to me, the weekly chart is very strong. And that says that there should be a lot of support between 103 and 101. You've got 101 target, that's fine. But I'm just saying be careful because it could stall before it goes down further. That's number one. Number two is that within the context of IRBT, iRobot, the fact that it had this U-shaped pattern, closed above the 107.98 high of July of 2017, having a high, what did I say, it was 117 something? 118.75, and closing, what did it close at last month? It closed at 113.50, well over the 107.98 area. It says to me that the strength of this particular move now had to be either product related, earnings, or whatever it is. This is really good action. So congratulations on actually having the guts to short it. Congratulations on doing so well so far. It's down at 106.88. You're already up 3 points, more than 3 points. But I'm just going to say to you, if at any point it goes sideways, that weekly chart is going to remain very strong. 93% in the stochastic and 83% still in the daily. You want to see by tomorrow another big sell-off, and this thing takes out 105 to 104.75 support, and then boom, it's on its way down. So great effort right now. You've done very well. Try to keep those gains. In fact, I'm going to say to you, I probably wouldn't want to take a loss after doing it correctly and seeing it, this big red candle. So I'd probably make my stop now that it's gone a little less than 5 points. This is just the way I do it. You stay with your plan if you want. And Dan wants to know ARWR. Hello, Basil. Would love your update read on ARWR, given a wonderful update on a key catalyst, as this is a long-term position from December 16th at 1.28, at $1.28. I'm holding deep in the money calls. I'm most interested in the monthly time frame. Thanks, Dan. Hey, Dan, AW, there we go. ARWR. ARWR. I think this is the biopharmaceutical. Yeah, Arrowhead Pharmaceutical. Pharma Bio, yes, pharmaceutical. It's in leg E in the weekly chart, having hit 200 period exponential moving. You're in at $1.28. Oh, is that calls or 120? Whatever it is. This is a huge gain. It's gapped up today. It's up 6.20 at 20.29. Now, this particular gap must be on news. Here, I'm going to look at the news. Must be on news, because otherwise, I mean, nothing happens on a day like this. Oh, where did you go? I can never find this. Let me do it again. Click. Is there a news thing? There has to be. Oh, there it is. All right. News. ARWR trading at 20.27, up 6.17. Midday market update. Nasdaq down over 1%. Arrowhead Pharmaceuticals says HBV was what? Was generally well tolerated in HBV patients. Very good. This is a positive announcement. Says up to 4.0 log 10 reduction in HBsAg. I don't know what's going on here. Observed following 3 doses of Arrow HBV. Very good reading. Okay, this is the way, because it's a news-related thing, a positive news-related thing. I love what it's doing. What I am going to say to you, it's unusual to be trading in the 14s one day and the next day to hit 22. So under every other circumstance, this is fabulous news. I would say you keep your core position, but think about taking a little bit off. This is a recovery high. I mean, this is a spectacular move. Just don't let it go to waste. I mean, yes, we have these targets. You've been looking at targets from previously, 2005, 2007, way back in the 60s and 70s. But go step by step, and I would just say to you, if you want, why don't you take a little bit off now, reward yourself, and then put that back. Look, it's a 20. You can even put it back if it partially fills the gap in the 16s. That's 4 points you've just made in your sleep. You didn't even know. They woke up this morning and boom, that's what happens. So think about it that way, because you've done really well. Obviously a fabulous company doing the right thing. I would just say to you, use to your advantage gifts that come that you never expected. So take something off, fabulous gain, and even if you take it off for 20.37 and it goes to 24 and you say, oh, you could have made more. But this is a gift. There's a big difference. All right, I hope that helps you. But fabulous call. My longer term says that there should be some kind of a consolidation because it's hitting the high that was made at 27.60, sorry, in the 20s at 27.63 back in March of 2014. This is over 4 years later. So we're looking at leg E. It hit the 200-period moving average first time since it broke down back in August of 2007. Hey, I think 27 would be my next target, but it might take a little while to do that. So hey, congratulations, Dan. Beautiful move. Up like that. Got a couple of questions I'll answer. Is 1997 read? Hang Seng, now the Dow will fall. 2024, I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Steve comes up, Dag White comes up, Tom O'Brien, and I'll be back tomorrow, of course. Now, this is as we're about to wrap up. Power shares, aerospace, and defense, all-time high as we speak. So much for my thinking that they would start to pull back. They certainly did pull back from the 58.90 area back in July to the 57s, and now all of a sudden we're at 59.75. And GT says ITA set for all-time high daily close. Dollars into Boeing, Lockheed Martin, GD. Hey, Look at this. The PPA, which is the Power Shares Aerospace and Defense ETF at 59.75, is up 41 cents. So why isn't gold, if the defense stocks are moving higher, and that's obviously to do with some fear of things, gold is up 3. Gold should be up 20, 30 over the last 2 days. So I'm watching it very closely. So it's this is a very important period, because I think I've been talking about this for a couple of days, quite a few days, actually, about a week, that the FANG stocks are all, to me, looking like they've topped out. And not just daily, the weekly charts have already started turning down. Somebody watching the monthly charts, and that says you've got to get some kind of rotation. Otherwise, the whole Dow, now it's down 28. If that Dow starts to move down 75 again today, that's going to be very negative. So I just be cautious. I've been saying for about a week, try to raise cash, have a cash ready. Going to be fantastic purchases coming up at some point. Don't feel like you have to do anything unless you're looking for quick trades. We've had a couple of trades that we've attempted. One is still working, and one we just got stopped out. Now it's back over what we entered for. So yeah, some stocks are holding beautifully. So be very selective. That's what I'm saying here. Be selective. Don't be afraid to short. If you're short, just put your buy stop in, or if you buy the inverse, just handle it like you handle anything else. This is a period fraught with potential hysteria coming up, and I don't see how the market is going to break into the 26,000s and hold there if this is the case in the Dow. So be careful. It's very important to be holding cash. Not an embarrassment to be holding cash at this particular point. Have your stocks, put in stops. Just be careful. That's what I'm saying. I'll be back tomorrow. Have a great day. Stay tuned for Steve.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.